Let's take a look. This is the 30-minute. That point when we're drafting this was negative momentum, and we're expecting a rejection at zero line, meaning we could get another wave 5 down, and ideally it should reject at that neckline. The counters, of course, that is higher degree 4B. This is 4C that we're talking about. Does a 1 and a 2, an internal 1 and a 2. It does a 3. That 3, of course, is a 5-wave swing. 1, 2, 3, 4, 5. Could be over, but we think that this is just 3. This is 4 now. Should reject somewhere at 129.4, 129.35, even 129.45. There's a red arrow here. Market gets be a sell here. We do a wave 5, right? It is just that it's a 5 equating with this 4 label in yellow and that 3 label in yellow. Everyone will expect this to bounce at 127.5, and this is the end of 40. And then you get to do a 4B. Now the market will surprise probably everyone, feed on the stops, fall back all the way to 126. It is still a wave 5, it is still a wave 40. Why 126? Of course, everybody remembers this 126 is on the daily chart 61.8%. Okay, so even on this is a daily chart, 61.8% is 125. Let's take this to 4 hours. We have a projection for 125.9 and 161.8, but the important proportion comes out of that daily chart. This is really an important proportion. A wave A, we're doing the wave 4A now, so we should be doing 61.8 correction of all of this very strong rise. This very strong rise, of course, is what we're correcting. Now, if you're an advancing market, if this is still bullish, you usually bounce at 78.6, right? And you move on higher. So if we're going to be bouncing at 78.6, would still be bullish market. We now have a correction on the 4 hours, and we have a correction on the 1 hour. We should be doing 61.8 in level A of the correction, 50% and 38.2 in level B of the correction. Otherwise, it will not be a correction. It will be a continuous bullish market. So if it is a correction, you should be seeing actually 125. Now we are looking at 126 on the belief that something is wrong with the projection in the first place, and that one 0.618 comes in between 0.786 and 0.618. So midway is 126. On the 4 hours, of course, we get 126 projection here as a wave. Well, we're taking that projection from the counter motive, I believe. This point, 130.09 down to, this is of course wave 3 into C, with that wave C. If it does a 5, an extended 5, we're looking at the bounce that we're seeing right now, making everybody believe that the correction is over. And then, so we're looking projections right from that point below that yellow arrow all the way down to the market bottom. Everybody believes the correction is over, the market is going to go a higher head. We get surprised that actually C is not yet finished, and that C still has a wave 5 that takes you to 126, where we end that 4A, higher degree A is done. You're moving into higher degree B. Okay, so again, all the momentum will tell. Now we understand the structure. Let's take a go live. We should be seeing the market approaching 129.3, 129.45. We check the momentum picture, very important. If we are going to be rejecting, we're going to be seeing negative momentum on the 5 and 15 minutes and even on the 30. We know then that we hold our shorts. We were shorting yesterday, I believe, 128.10. If we're still shorting these, if we break above that level 1, we want to close them. We're shorting half size. If we do not break above level 1, we're going down, going into the weekend, we'd still want to hold half size. But we would have the ability to add if we feel very strongly that the trigger is a strong trigger. We were going to add yesterday at 129.3. If we find that we do not want to carry excess risk, we let the trade run towards the end of the day. If we are in profits at 127.5 again, to close out on profits. If we are comfortable in the position, we let it run across the weekend. Should be going to 126 next week. Again, subject to a negative momentum. Okay, so the important takes now on momentum are going to be the 1 hour and the relevant shorter term cycles below that 1 hour. You can see on the 1 hour we're having negative momentum. We call this a zero line rejection. It means we are going to be rejecting below 200-point moving average. We're going to be rejecting at 50-point moving average or in between. We are below the neckline. We are 129.3 below the neckline. We believe can take us all the way to 129.49 even, and 4.5 of course allowing for spread. We could get a spike into this and fall back, and we could reject that internal neckline, 129.9, and this is still bearish. Okay, so if it is negative on the 1 hour, I believe it's negative everywhere.